If you're sitting on more than 100 ounces of silver right now, doesn't matter if it's bars, coins, ETFs, futures, or mining stocks, this is for you. Not the casual collector or the thinking about buying crowd. You, who have at least $8,440 tied up in metal at last Friday's close of $84.40 an ounce. Because starting Monday, February 24, 2026, your silver stack faces risks and opportunities that don't apply to someone stuffing a handful of ounces in a sock drawer. You've got to pay attention here. That 100-ounce mark isn't some arbitrary milestone. It's where your hobby turns into serious money that needs serious management. A 10% silver price move can whack or fatten your stash by over $800, and with volatility ramped up thanks to margin hikes, vault shortages, Chinese export controls, and record paper-to-physical ratios, your pain or gain could happen fast and without warning. Knowing exactly what you own and how it could fail you is not optional. If it's physical silver in your safe, congrats, you dodge most counterparty nonsense, but good luck offloading 100 ounces quickly without a discount or headache. If you hold SLV shares, remember that last January's $3 billion redemption wasn't just a drop on the radar. It's one of the biggest red flags. Paper silver here increasingly tracks a price disconnected from physical metal, meaning your screen losses might not match what's really happening in the vaults. PSLV lessens some risk with allocated metal, but premiums can evaporate faster than your patience in a crash, chopping 4% off your position instantly. Futures holders, you're basically playing with fire. With 18-to-1 leverage and a margin call lurking around the corner, that January 31st 31% intraday swing could obliterate your margin and then some. Mining stocks come with their own Greek tragedy of operational risks and leveraged price moves. Know your companies or be surprised when your stocks dive while silver spikes. You also need to know your real cost basis, because it affects your tax situation and whether you can stomach the flickering profit or loss numbers. Bought at 25, you're grinning on a 5,140 unrealized gain per 100 ounces. At 110, you're already nursing a 2,560 loss and clutching your pearls hoping for a miracle. Not knowing this number is like trying to sail blind in a storm. March delivery is looming, and the paper silver swirling around 340 million ounces versus less than 100 million physical registered ounces means you're in for a wild ride. Price could either scream higher if delivery demand explodes, or collapse if traders decide to bail and paper keeps rolling. Write down your plan now. What you'll do if silver rockets above 90, or if it falls below 80. No winging this if you want to keep your head above water. Finally, sort your insurance. Standard homeowner policies covering $200 on your 8,000 plus stash is like bringing a squirt gun to a forest fire. Check your coverage, get receipts and photos in a secure cloud. This isn't glamorous, but losing everything to fire or theft beats losing it to market chaos, because at least you had a sliver of protection. So write down your strategy for the next 30 days, your sell thresholds, your buy-in points, your absolute pain limit, because even the best beliefs don't pay the bills if the market kicks you to the curb hard enough. Preparation beats prayer. A written plan beats panic when silver's most volatile days hit. You have until 6 p.m. tonight to get your act together. Know your holding structure, verify your data, protect your position, and have a clear, rational plan to survive the storm. Because in this game, conviction without preparation is just wishful thinking, and preparation without conviction is just window dressing. Do both, or get ready to be another casualty of silver's next big move.